when you calculate taxes, sometimes there's a marriage penalty. Your book talks more about this. In 2017, I believe that's where these values are from, there was a marriage penalty. So if two people were married, they might pay more in taxes than if they were single and filed as single. So in both of these problems, you'll see that you have a prompt. It talks about a couple and they were engaged to be married. Perhaps because of other events in 2020, they didn't marry. So we're going to compute their taxes for both statuses, if they had been married compared to if they remain single, and look at the comparison. I want to mention that in 2017, this marriage penalty did exist. For 2020, it is mostly eliminated. Only for couples that have very high income ranges do they have a marriage penalty. In 2020, I want to give you an idea. You can look online. This is taxfoundation.org. So many different websites, and you can look at the examples of tax brackets and rates in real life. This chart, so table 1, provides the rates. So you'll see every administration and every year the tables will be different. But for 2020, we have our rates here, 10, 12, 22. And then, so our margins, you'll see that it's stated a bit different here. But this first rate is towards 0 to 9,875, and then etc. So it's similar to your homework here. You'll notice that there are 3 columns. There is a status for heads of households, but we are not concerned about that in your homework. So all you see in your homework is a column for single individuals and a column for married individuals filing joint returns. There are 5 statuses in total. Your homework simplifies that a bit for us. When you look at the chart, we're going to calculate taxes then for Gabriella and Roberto if they remain single, and also compare that to if they had married. So I'm going to show you how some of those calculations work. Please pause this or fast forward as you need to, since it is somewhat difficult to type on the slide or to write on the side. I'm going to show you the calculations over here. So we're going to calculate taxes for Gabriella. I'm going to subtract. So I'll notice this is her adjusted gross income. So from her adjusted gross income, you'll see this over on the right, I'm going to take $97,000 minus a standard deduction of $6,350 minus a standard deduction of $4,050. This tells me that she has a taxable income of $86,600. Once I know her taxable income, then I'm going to calculate her taxes in using the singles column. Because she has a taxable income of $86,600, I will use the first 3 margins here. So she has a salary below $91,900. So I will use the first row, calculate 10% of that difference of the interval, 15% of the next interval, and then 25% of her income up to $86,600. So what I would type in the calculator at this point would be 10% of $9,325. So 10% times 10% of $9,325, which is just $932.50. I will add 15% times the margin. So the margin there is $37,950 minus, so that's the maximum to the maximum of the one before, $9,325. So the maximum and the minimum of that margin. 15% times that amount. Then I will calculate 25% times 25% of her salary, $86,600, minus the minimum of the 25% margin. So the minimum of this margin would be that number you see from the previous row, $37,950. I will calculate that. I get $17,000 $388.75. When we calculate our taxes, we always round to the nearest dollar. This, I'm not going to press enter yet because I'm rereading this. Calculate their income. This is only Gabriella's income. I now need to go through the entire process with Roberto again. I'm going to do the exact same calculations as what I did before, except I noticed that Roberto has a different income. So I'm going to have to calculate his taxable income first. 82,300 minus 6,350 minus 4,050. That gives me a taxable income of 71,900. I use the exact same process I used for Gabriella, but I use Roberto's taxable income of 71,900. When I calculate his taxable income, I get that is 13,713.75. I'm going to add that to Gabriella's taxable income, and I'm actually going to do that with the value before I rounded it. So I'm going to use the $17,388.75. That gives me $31,103 when I round to the nearest dollar. So $31,103. And that will be the correct answer. So what we did there is we found Gabriella's taxes. We found Roberto's taxes. I added those together. This would be what they would pay if they remained single. They're still living together and intend to be married, so we're calculating that though as if they intend to consider that their money together. When we calculate their income tax, if they marry before the end of the year and file a joint return, your taxes are yearly for the previous year, by the way, then their income tax would be, so in this scenario, what we're going to do instead, I'm going to put a separator here. What we're going to do instead is just go ahead and assume that we lump all that money together and assume they're okay with that. So instead of them separately, we're going to add their income, their adjusted gross incomes together. And then we're going to use the married chart, subtract their deductions and 2 exemptions. So I'm going to subtract 12,700 and I'm going to subtract 2 times 4,050. That gives me 158,500. That would be their taxable income as a couple. So now they have a different chart here. This is their money together. 158,500, I will be going up onto the 28% margin here, because I'm just a bit over 153,000. So again, we will continue this process. I'll take 10% of, so times 18,650. I'll add that to 15% of the entire margin. So 18,650 to 75,900. So that's why we take the difference of these. We don't want to tax on $18,000 over and over. So we have to take the difference between these. So I'm taking 75,900 minus 18,650. Then I add 25% of, so 25% times 153,100 minus 75,900. That would be the width of the next interval. And then lastly, I add 28% times 158,500. So 158,500. That's their taxable income minus the max of the previous margin, 153,100. Run that total and I get $31,264.50. So I'm going to enter 31265. Okay, the book is trying to teach you something here. in 2017, there was more of a marriage penalty than there is now in 2020. So when you do these last two problems, you will be asked a question, and it talks about this in the book, so it's really just trying to emphasize the reading. Does the couple face a marriage penalty if they marry before the end of the year? Yes, they do. So we already see that there is a difference. We pay more money if we file married than we do if not. The book talks about marriage as really a decision of the heart, something along those lines. But in this scenario, if they get married, they are going to have to pay an extra $162. So yes, they do. And that's because the marriage, if they are a couple, they'll pay more than if they were single. And that is how that problem works. Okay, for this problem, I worked part of this in class, and I believe I messed up that first part, so I'll do that again. Again, you'll do this exact same problem, but just assume they have the exact same salary. First time you do it, you'll do it for single, so I'll show you that again. For Katie and Todd, I'll just do this, Katie or Todd, so one of them at a time. 191,000 minus an exemption and a deduction. So this is just for one person. So that would be $180,600 as taxable income. $180,600. So now I'm going to use a chart up until that value. I will take 10%. By the way, you can go backwards if you'd like, if that feels more natural. That's certainly fine. I just keep going through the chart each time, and you stop when you get to a max value for their taxable income. So 10% of 9,325 plus 15% times the margin, the interval, difference of the interval there. And in statistics, we call that the range, but it's not. It's different than the range we learn in algebra. But 10% of the first, 15%, 25% times the difference, because we haven't made it to their income yet, plus 28% times their taxable income, 180,600 minus the max of the previous interval, and that gives me 43,000. 43,000, if you can't see this, $43,550 when I round. What we're going to do before we answer this, though, is put that together for both Katie and Todd. So you'll multiply that by 2. So 43,550 times 2 gives us 87,100. So 87,100 is what you see here. I think in class I forgot to take the exemption away, something like that. I was trying to do that in the middle of class. So there is that fix. Now in class we worked the income tax. If they were together, you would do that exactly like I did for the previous problem. Multiply this times 2, subtract 1 standard deduction and 2 exemptions if they're married. Then you're going to go through the same process. You'll have to go through until you reach their maximum taxable income, and then that will give you their total income tax. Most likely, but not always, they will be charged a marriage tax penalty. Again, that was because these tables were from 2017, I believe. In 2020, that has changed some. All right, best of luck with those.